we are going to learn next chapter, that is ABC costing. Which is also termed as activity based costing. Now, please understand, we have learned a hint of it in a chapter of overhead. Practically, we have learned everything in chapter of overhead as far as ABC is concerned. But this is so much important concept that a separate chapter and separate set of questions are there for activity based costing. What is activity based costing? Before that, you need to understand what is absorption costing. It is also termed as absorption costing. It is also termed as a traditional method of costing. We have understood concept of overhead. Try to understand, there are three types of overheads in a particular company. One is a setup cost of say rupees 1 lakh. What is setup cost? You will have to set up machine every time you start the machinery. Say a day is work for 8 hours. So 8 hours all machinery will work, and on next day you will have to set up the machinery. And that setup related cost is how much? Rupees 1 lakh for a period, say 1 month. Then there is material handling cost, which is rupees 2 lakhs. And say there is a quality control cost, which is rupees 3 lakhs. These are overhead cost of your company. Why they are overhead? Suppose this company is manufacturing say pen, pencil and eraser. Then it is not related to pen, it is not related to pencil, it is not related to eraser. It is related to all three of them. So they are termed as overhead. And what is overhead of this? Total overhead is 6 lakhs. What is absorption costing? Please try to understand. It is as simple as this. To absorb the overhead. Now we have learned this in overhead chapter, right? First, what we do, if there are 5 departments which are working in the company, we distribute overhead to all 5 departments on some logical ratio. Then for the service department overheads, we again redistribute it to production department. Why? Ultimately, the products which are manufactured and sold will be manufactured and sold in production department. Say a pen will not be going to maintenance department. Machinery will be going to maintenance department. So maintenance department is a service department, the cost of which should be apportioned to all production department. Then how we apportion the overhead? Suppose pencil department is using production A department for 5 hours. Then 5 hours multiplied by absorption recovery or absorption overhead rate, we will be multiplying it, we will be getting absorbed overhead. Alright. This is how we have learned overhead. Now, what happens is, if the total overhead is 6 lakhs, if machine hours are 60,000, alright. See, total overhead is 6 lakhs. We are using only one base to distribute the overhead to different departments. What is the base? It is rupees 10 per machine hour. And it is also termed as which type of rate? Blanket rate. Why blanket rate? You are not differentiating between setup cost and material cost. Whether it is setup, material or quality control, you are distributing it in which ratio? Machine hours. What do you think is a logical ratio for distributing all three costs is machine hours. This is a blanket rate. And what is a blanket rate? Rupees 10. How we have got this blanket rate? Rupees 6 lakhs divided by 60,000. All right. There are two production departments in this company, say. There are two production department, A and B. Where A is working for 40,000 machine hours. Let me not take any under absorption. And B is working for 20,000 machine hours. B is working for 20,000 machine hours. What will be overhead absorbed by A? 4 lakhs. How 4 lakhs rupees? 40,000 multiplied by 10. And how this will be multiplied by 10 will be 2 lakhs rupees. How much will be absorbed by A? 4 lakhs. How much will be absorbed by B is 2 lakhs. And total overhead of 6 lakhs will be distributed to A and B in one single ratio, which is termed as blanket rate. We are going in same question for ABC. Activity based costing. Now understand how many costs were there? 3 costs. Setup cost. What was setup cost? 1 lakh rupees. Then it was material handling cost, which was 2 lakhs rupees. And then it was quality control cost, which was 3 lakhs rupees. What is total overhead cost? 6 lakhs rupees. We will not treat all the overheads as same. We will distribute overhead to ultimately two departments. Which are the two production departments in this company? A and B. But we will distribute each and every overhead separately, activity wise. Based on activity, we will be distributing overhead. So what is a good base for distributing setup cost? It is number of setups. All right. See, A production department is doing more setups and B production department is doing less setup. Then A should be given more cost and B should be given less cost, and vice versa. What should be a good basis for dividing material handling cost? Should write down setups over here. Number of setup. Material handling cost. What should be a good base for distributing material handling cost? What are material handling cost? When your material comes in, you will have to handle it. When you purchase the material, it will come into your godown. You will have to keep it in godown, and ultimately you will have to distribute it to production. It will be number of orders. If you are purchasing and handling the material, it will be number of orders. If you are issuing to production department and you are talking about material handling cost, then it will be number of production run, on which basis the cost should be distributed. Quality control cost is a number of inspection. Quality will be related to inspection. So number of inspection should be good basis for distributing the overhead. Now, total number of setup in A and B were 20 and 30. What is this? Number of setup. Number of orders as far as department A and department B is concerned was 50. And number of inspection in department A was 8 and 2 in this particular month, right? So this are, what is the total number of setups? 50. Total number of orders 100, and total number of inspection 10. I will be dividing setup cost For setup cost, I will be finding out separate absorption rate. For material handling cost, I will be finding out separate absorption rate. And for quality control cost, I will be finding out separate absorption rate. I will not be finding out one blanket rate or one common rate to distribute the overhead. So I will be finding out what will be cost per setup. It is 1 lakh divided by 20. It is cost per something, right? So if it is number of setup, it is cost per setup. If it is number of orders, it is cost per order. And if it is number of inspection, it is cost per inspection. What is the total cost of setup? 1 lakh. How many total setups are there? 50. So 1 lakh divided by 50 will be rupees 2000 per setup. Will be overhead absorption rate, correct, but it is not a single rate. It is absorption rate just to absorb the setup cost. What will be number of orders cost? Will be rupees 2000 again, 2000 per order. This we also do in EOQ, right? 2 lakh number of orders, total ordering cost divided by number of orders will be cost per order. Number of inspection, it is 10, it will be rupees 30,000 per inspection, right? How the cost will be distributed to A and B? First try to understand it in simple mathematical manner. Will I distribute a total overhead cost of 6 lakhs rupees together or separately? Separately. Activity wise, so it is termed as ABC. The cost is distributed based upon activity, so it is termed as activity based costing. Which is our first cost? Setup cost. What is the total? 1 lakh. How many number of setups are there in A? 20. How many number of setups are there in B? 30. What is the absorption rate per setup? 2000. Which will be, it will be 4 lakhs? No, 40,000. And 30 multiplied by 2000 will be 60,000 rupees. What I have done? How many number of setups department A has done? 20. What is the cost per setup or absorption rate of setup is 2000. So 20 multiplied by, it is 2000. So 20 multiplied by 2000. Number of setups in B, 30. Absorption rate, 2000, it is 60,000. Please understand, mathematically, logically, you are distributing setup cost in number of setups and not on machine hours, which was the common rate in absorption costing, right? So this is number of setups and multiplied by absorption rate. Yes sir, can't we do 1 lakh divided in the ratio of 20 is to 30? We have done the same thing, but try to understand here, forecasted number of setups are also same and actual number of setups are also same. All right, so budgeted and actual figures are same. If they are different, you will have to find out this figure, that is 2000 per setup. What is second cost? Material handling cost. What was total material handling cost? 2 lakhs. What is the absorption rate? 2000. How much materials were handled by A? 50. Number of orders is 50. Number of orders is 50 in B also. What is the absorption rate? 2000. 2000. What will be absorbed by A? 1 lakh rupees. What will be absorbed by B? 1 lakh rupees. Third cost was quality control cost. Which is 3 lakhs rupees. Should be distributed in number of inspection and 30,000 per number of inspection. multiplied by 30,000. Multiplied by 30,000. How many inspections were there? 8. How many inspections were there in B? 2. This is 2,40,000 and this will be 60,000. A will be 3,80,000 and this will be 2,20,000. What is total cost that we have distributed in A and B? It is. So please understand, overall we are doing the same thing in absorption costing also and in ABC also. Ultimately, we are distributing 6 lakhs rupees to department A and B. Now it seems easy. Absorption costing is between A and B is distributed by one blanket rate which is based upon machine hours. And in activity based costing, all the 3 activities will be distributed in a different ratio on basis of their logic ratio. If it is setup, number of setup, material handling cost, number of orders, quality control, number of inspection, right? Sir, a setup cost will be distributed in number of setups. How we will come to know? Believe me, when you read the question, it will be automatic. That if it is setup and if it is number of setup, material handling, number of orders, you will understand that this cost should be distributed in this ratio. Let us understand name of this particular thing. We were concentrating on setup cost. What is the logical base? Number of setups. Number of setups will be regarded as cost drivers. Do you understand this? Cost drivers. Setup cost will be derived or will be distributed on the basis of number of setups. So it is termed as cost drivers. So can I say this rupees 2,000 per setup, it is cost per cost driver? This is nothing but cost per cost driver. Alright. So we will find out cost drivers, we will find out cost per cost driver, and ultimately we will be getting an idea how to solve questions of ABC. Also try to compare this. What was cost of A when we were doing absorption costing? 4 lakhs. Cost of B when we were doing absorption costing is 2 lakhs. What is cost of A actually? 3,80,000. Here it is 2,20,000. Let me write down over here also. As per absorption it was 4 lakh and this was 2 lakhs. Which is the better method? ABC or absorption? Why?
Here, we are distributing cost as per what the cost is incurred.
Actually, what the nature of cost is, right? So, if your number of setup decreases by some say planning or by your sum of the decision, your setup cost is going to decrease. So a department which is taking more number of setups should be allocated more cost rather than a blanket rate that where the machine hours are more, the cost will be distributed more. What will happen? Try to understand if you follow absorption costing. Your product B will be under costed and product A will be over costed if you use absorption. What happens if you undercost the product? You will be unknowingly making losses. Say you determine your selling price as 2,10,000. You are determining your selling price as 2 lakh. You follow absorption costing. What is your cost? 2 lakh. You determine your total selling price of all the product as 2,10,000. What is the actual cost as per ABC? 2,20,000. You will be unknowingly making losses. In which product? Product B, right? If the product is overcosted, what is the loss? What is the cost? Actual 3,80,000. What do you have costed? 4 lakh. You might be selling this product at 4,20,000. And your competitor might be selling this product at 3,90,000. Same product, same company, same machines, everything same. But he might be selling it at 3,90,000 or 4 lakhs rupees. You are selling at 4,20,000. Your product is costlier in the market. Sooner or later, you will be out of the market. We have learned this in costing, right? Disadvantages of undercosting. There are no advantages in undercosting. Disadvantages in undercosting is unknowingly you might be making losses. Disadvantage of overcosting is sooner or later your price of the product is higher, so you will be out of the market. You should always try to follow activity based costing, except your overhead cost is only one and it is only of one nature. Like in a company, all the overheads are related to machines. They can use absorption rate as a machine hour rate. That is, they can use a traditional method of costing. It is so much important, so much important when you practice actually costing area. Ultimately, this will be the first criteria to resolve. If the company is going in number of products, if they are having n numbers of products. You have seen Balaji Wafers? What do you think they will be having number of products? More than 200? They might not be having 200 manufacturing plants, right? So they will be manufacturing all types of wafer in one plant. So see the number of overheads. They will be having n numbers of overheads, one plant, and n numbers of product like wafers. All right. Wafers also there are n numbers of types. All right. So do you think the cost of manufacturing one salted wafer and one say chili wafer will be same? Might not be same. It might be different, but their selling price right now is same, right? So if you don't know the exact cost, you cannot make a good decision. So for making exact cost, they would be using activity based costing to distribute all their overheads. Our problem is direct material, direct labor. No, because they are direct cost. We know that for pen, this is the direct cost. So direct cost we don't need to apportion. But when it comes to overhead, we need to apportion. We will be solving some of the questions of ABC. Yes. We are going to see 5.1. MST Limited has collected the following data for its two activities. It calculates activity cost rate based on cost driver capacity. Activity, cost driver, total capacity, and total cost. All right. So this 2 lakhs and 3 lakhs are say overhead. What will be cost driver? We understand this word also, right? Cost driver. Kilowatt hours and number of inspection. This is quality inspection. If it is power indirect, it is distributed in the ratio of kilowatt hours. It calculates the activity cost rate based upon the cost drivers. The company makes 3 products, M, S and T. For the year ended 31st March, the following consumption of cost drivers were reported. So M uses how many kilowatts hours? 10,000. S 20,000 and T 15,000. Similarly, M uses how many number of inspection? 3,500 inspection. S is having 2,500 inspection and T is having 3,000 inspection. We will be finding out cost of all 3 products. Not cost, but overhead cost of all 3 products. Calculate the cost allocated to each product from each activity. Calculate the cost of unused capacity of each activity. This will be important. Discuss the factors the management considers in choosing a capacity level to compute the budgeted fixed overhead cost rate. Alright. So this will be C5.1. I am solving it in Excel sheet. So it will be easy for me. It will be difficult for you to cope up. It will be just for first 2 questions. What is the total cost of power? It is 2 lakhs rupees. That's it. All right. So total cost of power is 2 lakhs rupees. What is the cost driver of power? Kilowatts. How many are total budgeted kilowatts? 50,000. Total budgeted kilowatts are 50,000. What will be cost per kilowatt? It will be 4 rupees. In my case, it will be automatically calculated, right? So 2 lakh divided by 50,000 will be is equal to 4. So each product using 1 kilowatt will absorb 4 rupees as overhead. What is total quality inspection? 3 lakhs rupees. What are total number of inspection? 10,000. What will be cost per inspection? Will be 30 rupees. What are this? Overhead recovery rate based upon activity, and so this full costing method of absorption of overhead is termed as activity based costing. All right. Now I will be finding out cost of product M, S and T. All right. M uses how many kilowatts? M uses how many kilowatts? 10,000. All right. M uses 10,000 kilowatts. How much power should be apportioned to M? 40,000. How 40,000? 10,000 kilowatts. And what is the rate? 4 rupees. Right. So it will be 40,000. How many quality inspection M is having? 3,500. So what should be the cost of quality inspection? Will be nothing but 3,500 into 30. That will be 1,05,000. What will be total cost of overhead as far as product M is concerned? It is 1,45,000. It is absorbed overhead by M. Which two overhead are absorbed? Power as well as quality inspection. Similarly, S is having 20,000 kilowatts and 2,500 quality inspection. Total cost will be 1,55,000 for M. It is done in the same manner. T is 15,000 kilowatts and quality inspections are 3,000. All right, please concentrate over here. How I have found out cost of T? 15,000 into 4. That is cost per kilowatt is 4 and number of kilowatts used by T is 15,000. Total cost will be 15,000, for it is 60,000 and 3,000 into 30 will be 90,000. What will be total cost for T? Will be nothing but 1,50,000. What is total cost of all three products? 4,50,000. Is it total cost or it is only absorbed overhead cost? Only absorbed overhead cost. Total absorbed by all the departments are 4,50,000. What is the total budgeted cost? 5 lakhs. What is the total budgeted cost? 5 lakhs. Have all the three products, assuming there are only three products, have all three products absorbed 5 lakhs rupees? No. What is the reason? Unused capacity. What was the total capacity in kilowatts? Can anyone tell me what was the total capacity in kilowatts? 50,000. How much is used? 45,000. So what is unused capacity in kilowatts? 5,000. So it is, that cost is not absorbed by any department because that capacity is not used by any department. What is total quality inspection budgeted? 10,000. What is total quality inspection over here? 3, 3, 6, 8 and 9,000. So 1,000 quality inspection were less. So absorbed overhead by both all three departments was less. and this will be termed as unused capacity. What will be unused capacity? 5,000 and 1,000 quality inspection. 5,000 kilowatts, 1,000 quality inspection. See where I am writing it down. Unused capacity in kilowatts was 5,000. Unused capacity in quality inspection was 1,000. And so 1,000 into 30 will be 30,000. Should have automatically come, but it is all right. So what was the total budgeted cost? 5 lakh. How much is absorbed by all three departments? All three products? 4,50,000. How much is not absorbed at all? 50,000. What is the total overhead is 5 lakh, or total budgeted overhead is 5 lakh. So 5 lakh, it is rupees 50,000 overhead under absorbed because of unutilized capacity. We have done 1 and 2. Calculate the cost of unused capacity. What is the cost of unused capacity? Is 50,000. Calculate the cost allocated to each product for each activity. That also we have done. Discuss the factors that management considers in choosing a capacity level to compute the budgeted fixed overhead. See what they are asking. What factors management will consider to find out all this? Total budgeted capacity 50,000 and 10,000. What management will consider? What management should consider? Past average capacity utilization. Say all three departments every year are using total 45,000 capacity. Then you should not budget it at 50,000 capacity, because then it will be absorbing less. If you absorb it at 45,000 total capacity, the rate will be higher. You can find it out even. If this was 45,000. If this was 45,000, it would be 4.44. What was it before? 4. So the cost will increase. So all the departments will absorb more, right? So to determine your total capacity, you should treat past average capacity utilization, budgeted production and sales, practical capacity, normal and unavoidable ideal time. Those are all the factors that should be considered. We are going to 5 point. All right, you may not calculate first and second one. That is all right. Or if some of the points are pending, that is also absolutely all right. We are going to see 5 point. PQR Pens Limited manufactures the two products, gel pen and ball pen. It furnishes the following data for the year. Annual output of gel pen is 5,500, 24,000. Total machine hours are 24,000, 54,000. Number of purchase orders are 240, 448. Total number of setups are 30 and 56 for both the pens. What are total machine hours for both the pens, gel pens as well as ball pen? 78,000. Total number of purchase order 688, and the total number of setups 86. The annual overhead are as under. Volume related activity cost. Can you tell me a good basis for distributing volume related activity cost? They are overhead, but they are volume related. number of purchase order, or it should be annual output? Don't see the answer, otherwise you will get confused. What is volume related? It can be machine hours, but volume related is practically what is your output. Say gel pen are manufactured 10,000 units and ball pen are manufactured 5,000 units. Then 10,000 is volume of gel pen and 5,000 is volume of ball pen. What is volume over here? 5,500 and 24,000. Sir, can't we use machine hours? Yes, you can use machine hours. Why? Because the volume higher, machine hours will be higher, volume lower, machine hours will be lower. Both are the good methods. If you want to tally your answer with the book, you should use machine hours. Otherwise, output is also a good thing. Volume is nothing but output. Volume means output. I am using machine hours. See, even if it is institute suggested, you can see the suggested answer. They might have written, if volume related is assumed based upon output quantity, then the cost driver would be different and answer would be different, but the answer would be absolutely correct, right? Setup related cost. Now I need not say you. It should be number of setup, right? It should be purchase. Calculate the overhead cost per unit of each product, gel pen and ball pen, on the basis of traditional method of charging overheads, activity based costing method. Find out the difference in cost per unit between both the methods. Alright, so we have to do traditional, we understand, right? Traditional method, absorption method, blanket rate is one and the same method. Traditional method of charging the overhead. Alright. Have I done it in Excel? No. What is the traditional? What is the total overhead cost? 475 020 579 988 504 992. Total. It is 15 lakh 60,000 rupees. When you use a traditional method, you will treat all overhead as same and use only one cost driver to distribute the cost. What should be the good cost driver? We have learned it in overhead chapter. Machine hour rate. So normally, traditionally what was used was machine hours. Divided by total machine hours, 78,000. Can you give me the answer? 15,60,000. It is 20. 20 rupees per machine. How many machine are used by gel pen? 24,000. How many are used by ball pen? 54,000. What will be cost apportioned to gel pen? 24,000 into 20. It is 4,80,000. 54,000 into 20. 10,80,000. Total is 15,60,000. Yes. Practically, in traditional method of costing, two products, the cost will be distributed based on the ratio of machine hours. Had you distributed this in the machine hours ratio, then also the cost would be same. What is the total cost distributed to gel pen? 4,80,000. Ball pen, 10,80,000. All right. How many ball pens are manufactured? Sorry, how many gel pens are manufactured? 5,500. What will be cost per unit of overhead? Total overhead distributed to to gel pen is 4,80,000 and gel pen manufacturers are 5,500. Can you help me out? 4,80,000 divided by 5,500. It is 87.27. And 10,80,000 divided by 24,000. It is overhead cost per unit, right? It is not per machine hour. What is the answer? 45, exact. So if you use the traditional costing method, cost per gel pen, that is overhead cost per gel pen, will be 87.27 and overhead cost per ball pen will be 45. Let us go to ABC. We have decided volume related activity. We will be distributing it in machine hours. 475,020 is a total overhead cost. Don't try to do it with me. It will be very much difficult. You can try it out, but still. What is the total cost is 475,020. What is cost driver? Machine hours. What are total machine hours? 78,000. I will be getting cost per cost driver, which is the 6.09. What is 6.09? Can you tell me? Overhead absorption rate to absorbed volume related activity cost per machine hour. 6.09 per machine hour. Setup related 579,988. What is the cost driver? Number of setup. Total number of setups are 688. I will be getting 843.0058. What is purchase related cost? 5,04,992. Okay, setup they have just 86. So it is 6744. 5,04,992 is the purchase related cost and number of purchase order is 688. It will be 730. These are my cost drivers. I am distributing all these three costs to gel pen and ball pen. How I am distributing? Try to understand. As far as gel pen is concerned, what is the number of cost driver for volume related activity? As far as gel pen is concerned, volume related activity 24,000 machine hours. 24,000. How the total cost will be calculated? You can do it in your calculator. 24,000 into 6.09. Right? What are number of machine hours in ball point? It is 54,000. What will be ball point absorbing volume related activity? 3,28,860. How it you can verify it in your calculator? It is 54,000 into 6.09. Same way, number of setup in gel pen is 30 and 56. 30 in gel pen, 30 in gel pen and 56 in ballpoint pen. Purchase related, number of purchase order in gel pen is 240 and 448. 240, 44. The cost will be automatically distributed. What is done is the number of cost driver multiplied by cost per cost driver. So if it is the purchase related cost, it is number of purchase order multiplied by cost per purchase order, which is 734. The cost has been distributed. What is the cost distributed to gel pen? 5,24,641. What is the cost distributed to ball pen? 10,35,359. I want to find out overhead cost per unit under ABC. Overhead cost per purchase order, per machine hour, or per unit? Per unit. Because I want to compare what will be overhead cost per unit as per traditional method and overhead cost per unit as per ABC. Overhead cost per unit under ABC. Can you help me out? 5,24,641 divided by 5,500, because 5,500 is gel pen output. It is 95.38. 95.38. And what is 10,35,359 divided by 24,000? That are number of units. 43.14. All right. Under overhead traditional absorption method, what was cost of gel pen? What was cost of gel pen per unit? 87.27. 87.27. What is the overhead cost per unit as far as ABC method is concerned of gel pen? 95.38. We understand that ABC method is a better method of absorbing the overhead because it absorbs the overhead based upon activity. What is the true cost? 95.38. If we had followed a traditional method, what would be the cost? 87.27. We would have undercosted the product. Tell me what will happen if we undercost the product? Unknowingly making losses. And if in ball pen, you would have overcosted the product. 45. Actual cost is 43.14. Alright. So you would have overcosted this and you would have undercosted this. Right. What you should do? Exit costing, right? There are how many products in this question? 2. All right. In practical life, one company manufacturing say 200 products, you'll require a full-time cost accountant. They'll require a full-time cost accountant. If they are not doing it, believe me, at the end of the day, they might be not taking sound decision. They might be selling more of the product, earning less of the contribution, and less of the product earning more of the contribution. Just because their overhead cost per unit is calculated by traditional method and not by ABC method. See, we have learned marginal costing. In marginal costing, we do something like this. In marginal costing, we do something like this. It is sales minus variable cost. This includes variable overhead. Will be nothing but contribution. And this was directly given to you, that variable overhead is so and so, right? So if they are under costing, if you are over costing, it will make difference to your contribution. So you might be actually earning less contribution than you think. You might be selling some of the product which is having higher cost, lower contribution, and you feel it is doing good in the market. This was 5.2. We are going to 5.3. HMB Limited HMB Limited is producing a product in 10 batches. Now this is important. It is manufacturing product in 10 batches and each batch is 15,000 units. Try to understand. You will have to understand the business if you want to understand what you are actually doing. There are n numbers of products, especially Coca-Cola bottles. Coca-Cola bottles are manufactured in a batch. So once one batch raw material goes, it will manufacture 15,000 units of say Coca-Cola bottle. So raw material of how much will be mixed together? 15,000 Coca-Cola bottles will be mixed together. There will be 15,000 Coca-Cola bottles lying in the machines, and ultimately all 15,000 units will be manufactured at a time in a batch. All right. In this particular product, they are totally doing 10 batches of 15,000 units in a year, incurring the following overhead thereon. Material procurement 22,50,000, maintenance 17,30,000, setup 6,84,500, and quality control 5,14,800. The company is currently using the method of absorbing overhead on the basis of prime cost, and they have given prime cost for the year amounted to 3,01,39,000. So they are using which method right now? Traditional. And what is the basis of their absorption? There can be only one basis of absorption in traditional method. And what is their basis of absorption? Number of machine hours or prime cost? Prime cost. Percentage of prime cost. There can be how many methods of absorbing the overhead? N numbers of methods. But which are the basics? Based upon total material cost, based upon total variable cost, based upon prime cost, machine hours, labor hours. These are some of the normal methods of absorption of overhead. Now it wants to shift to activity based costing. Information relevant to activity drivers for the year are as under: number of purchase order, maintenance, number of setups, and number of inspection. All right. Material procurement. See the basis. Can you tell me on which basis you will be doing? Material procurement. Number of purchase order. Maintenance. Maintenance hours. Setup. Number of setup. And in quality control. Number of inspection. They will not even change the sequence. The company has produced 15,000 units. Company has produced a batch of 15,000 units and has incurred 26,38,700 and 3,75,200 on material and wages respectively. The usage of activity of the said batch are as follows. You are required to find out the cost of the product per unit on absorption costing basis for the said batch. Determine cost driver, total cost, cost per unit output said batch on activity based costing. So you will have to calculate the question by both the methods. I am first using absorption costing. What are total overhead cost? I will require total of overhead. Budgeted total overhead cost. It is 22,50,000 plus 17,30,000 plus 6,84,500 plus 5,14,800, which is 51,79,300. You need to tell me if it is incorrect. It is correct. 51,79,300. And what is the total prime cost? Total prime cost is the 3,01,39,000. 3,01,39,000. And this is what is termed as absorption rate. And we will be getting only one absorption rate, which is 51,79,300 divided by 3 crore 1,39,000, which is 17.1847%. What is this? Overhead will be 17.1847% of prime cost, right? This is the absorption method of absorbing overhead. And if you recall, this we have done even in cost sheet, basic cost concept. There were coming factory overhead. There was a point, factory overhead, and it was written over there. Factory overhead will be 20% of prime cost. What does it mean? Factory overhead is absorbed based upon prime cost, and 20% was that overhead recovery rate or absorption rate that we are finding out in this particular question. We are talking about cost of one batch of 15,000 units. What is material cost of this batch? They say 26,38,700. What is the labor cost for this batch? It is 3,75,200. This will be nothing but prime cost. What will be prime cost? 26,38,700 plus 3,75,200, which is 30,13,900. 30,13,900 plus absorbed overhead. How much overhead will be absorbed? 13,13,900 multiplied by 17.1847%. If the absorption overhead was based upon machine hours, then number of machine hours multiplied by that absorption rate. But here it is based upon prime cost. It will be 30,13,900 multiplied by 0.171847. That is 5,17,930. What will be total cost including overhead will be 35 lakhs 830 rupees. I will also find out cost per unit, which is 35,31,830 divided by how many units are manufactured in a batch? 15,000. 35,31,830 divided by 15,000, which is 235.45. Per will be cost of one unit which is manufactured in this particular. What will be difficult one? ABC. It is not actually difficult, it is lengthy. Activity based costing. I will be distributing absorption, that is, I will be absorbing overhead based upon the activity. Let me draw directly the cost. How many units are, how many batches we are talking about? One batch having how many units? 15,000 units. I am not writing down material and labor cost separately because we directly know the prime cost, right? What is the prime cost? That will be same, 30 lakh 13,900. Will it be same in traditional method and ABC both? Yes, this both methods are of absorbing overheads. Direct cost is already always directly attributable to a particular product or a particular batch. All right. How in ABC overhead will be absorbed? Material procurement will absorb based upon number of purchase order. Maintenance based upon maintenance hours. Setup based upon number of setups, and quality control based upon number of inspection. Try to concentrate. How many material orders we have done in this batch? 48. All right. So material related cost, we have done 48 orders multiplied by what? Absorption rate. I will be finding out absorption rate. I have not yet find out. I am going in reverse manner, right? How much maintenance cost will be absorbed by this batch? Maintenance. How many maintenance hours this batch have taken? 810 hours. So 810 maintenance hours multiplied by absorption rate of maintenance. Number 3 is setup related cost. How much this batch has taken? Number of setups 40. 40 setups multiplied by cost per setup. And how much inspection does have taken? 25. So inspection cost will be 25 inspection multiplied by absorption rate. All right, just try to concentrate. How many absorption rate will be required? 4. How 4? Number of orders, cost per order, cost per hour, cost per setup, and cost per inspection. Why? Because there are 4 activities, 4 absorption rate will be required. How I will be finding out absorption rate of material? Please try to concentrate. For me, it will be extremely easy because I have drawn an Excel sheet for that. So I will be directly getting it. You will not be getting it. You will have to use your calculator. Total material procurement is the 22,50,000. Total is 20. $22,50,000. And total number of purchase order are 1500 for all the batches. So what is the cost per order? Is 1,500. Maintenance total cost is 17,30,000. Total maintenance hours is 9080. So it will be 190.50. Number of setups are 2250 and cost is 6,84,500. It is setup related cost. Number of setups are 2250. It is 304. Quality control cost is 5,14,800. And 2710. It will be 180. So I have got absorption rate based upon cost driver. What is cost per order? It is 1500 rupees. What is the cost per hour? It is 190.53 per hour. What is cost per setup? It is the 304.22. And cost per inspection is 189.96. I will be finding out overhead cost of this batch which is related to material. 48 into 1500. 72,000. 810 multiplied by 190.53. 1,54,340. 40 into 304.22. 12,169. 25 into 189.96, which is 4749. Just finding out total cost. Overhead is already distributed. 30,13,900 plus 72,000 plus 154,340 plus 12,169 plus 4749. 32,57,158. Will be total cost of this particular batch if you use ABC system of absorption. Do you understand? Prime cost is remaining same in both. It will remain same. This method are distributing of overhead. Here you have used only one rate to distribute total overhead. Here you have used different rates to distribute different activities of overhead. What is cost per unit? 32, 57, 158 divided by 15,000 units. What is cost per unit? 217.14. Had you used absorption costing, you would have costed this at 235.45, and actually it should be 217.14. If you have used absorption costing, you would have overcosted or undercosted? You would have overcosted. What you would have overcosted? Can you tell me? You would have overcosted what? Price per unit is the selling price, right? It does not mean that if you have overcosted, you will be overcosted overhead. Agreed. But what you have overcosted in this particular case is a batch. This batch is overcosted. Next batch hence will be undercosted. All right. There are total how many batches that you are going to do in this year? 10 batches. So if 5 batches are overcosted, then 5 batches will be undercosted. Is it all right? So for all the decision makings, your decision making basis will be incorrect. All right. So this is and which is always a good method, ABC or absorption? ABC, right? So this I am saying they are practical questions because in practical life, still n numbers of businesses which you think are very good businesses uses absorption system of overhead. See, before 2000 when there were no computers, it was good. Because if there are say 5,000 overheads, it cannot be distributed in 5,000 different ratios. All right, manually. But when you are having computer, you just have to give command to computer. right? You can see, verify the difference. Question number 1 that we solved and question number 3 that we solved, it just took 2 or 3 minutes to solve question number 1, just because it was everything programmed, right? All of you are getting an idea of ABC costing? It is easy, right? You go without learning the concept in CA final, you will always feel costing is a difficult concept. Costing, believe me, is nothing but overhead. It is not only overhead chapter, but majority of decisions that are going to be taken in costing is of overhead. So if you are in a costing department, you will not be a specific manager of material. Say EOQ concept is used by a manager who is in a raw material department and who is a manager of raw material department. How much quantity should be purchased? But when you are a head of overall costing department, majority of time you will be dealing with overheads. So this is one of the most important chapter, and the concept should be understood. Just finding out answer is not important. What is actually happening, you should be understanding. We are going to 5.4. And 5.4 again is an extremely difficult one. Frito-Lay has decided to increase the size of the store. It wants the information about the profitability of individual product lines: lemon, grapes, and papaya. So those are the 3 products lying in their store. They might be dealing in the malls, and they want to increase the size of the store. It provides the following data for the year of each product line. Revenue of lemon, grapes, and papaya is given. COGS is given: 60,000, 1,50,000, 90,000. Cost of bottles returned is given. Number of purchase order 36, 84, 36. Number of deliveries received 30, 219, 66. Hours of shelf stocking is 54, 540, 270. And items sold are 12,600. So those are number of units: 1,10,400 and 30,600. Frito-Lay also provides the following information for the year: bottles returned, ordering, total ordering cost they are having, total delivery cost they are having, shelf stocking cost they are having, customer support stock cost they are having. And those are the cost allocation basis if you are using ABC. Frito-Lay currently allocates stores support cost. What is the store support cost? All this, other than the cost of goods sold, to the product line on the basis of COGS of each product line. Calculate the operating income and operating income as a percentage of revenue of each product line. This is, believe me, traditional system of absorption of overhead. I will tell you how it is a traditional system of absorption of overhead. Let us write down traditional method. How many products are there? Lemon, grapes, and papaya. And also draw total column along with particulars column. I just need to copy sales. Revenue 79,350. Revenue or sales is 79,350. 2,10,060 rupees. And 1,20,990. Total will be 79,350 plus 2,10,060 plus 1,20,990. 4,10,400. From revenue or sales, if we deduct COGS, I normally get a profit, which should be termed as gross profit and not net profit, minus COGS. COGS is also directly given. 60,000, 1,50,000, 90,000. Total will be 3 lakhs. This will be 1,10,000. I am not drawing this total. Is it all right? I'm not finding out this total. It is absolutely all. Minus other indirect cost. This can also be termed as GP. Other indirect cost. All right. What are total indirect cost is this? What is total of this? Total indirect cost. 1,200 plus 15,600 plus 25,200 plus 17,280 plus 30,720, which is 90,000. Please concentrate. I will not add this 1,200 once again. It is already given, right? Bottle returning an empty bottle to the store. What is the cost? 1,200. So it is repeated, so I will not be rewriting it. What is the indirect other cost? 90,000. Sir, format is changing and the concept is changing. Believe me, the answer is no. Do you understand this? COGS are direct cost. COGS are directly related to the product. 90,000 is direct cost or indirect cost? It is related to one product or all the products? All the products. So it is ultimately overhead. How to distribute overhead between lemon, grapes and papaya as per traditional system? Question number 1. Allocate store support cost, all cost other than the COGS, to the product line on the basis of COGS of each product. On the basis of COGS of each product. I will tell you the ratio also or the absorption rate also. What is the total COGS of all the product? Total COGS 3 lakhs. And what is our overhead? 90,000. So do this. 90,000 divided by 3 lakhs multiplied by 100. It is 30%. This is overhead absorption rate. Overhead absorption rate based upon total material, total labor, prime cost, machine hours, labor hours. No. Based upon. So only I told you, absorbing overhead, there can be n numbers of ways. And this company is absorbing overhead based upon its COGS. So it will be COGS multiplied by 30%. So this will be 18,000. COGS multiplied by 30% will be 45,000. COGS multiplied by 30%. 20. Can you see the total? It will be 90,000. It is automatically distributed, right? 90,000 is automatically distributed to lemon, grapes and what I did? COGS multiplied by 30% or overhead cost is 30% of COGS. I will be getting profits. What is the answer in first? Is it 1350? this will be 2,10,060 minus 1,50,000 minus 45,000, which is 15,060, and this will be 1,20,990 minus 90,000 minus 27,000, which is 3,990. Not much interested in total profit, but it is 20,000. All right. See what other thing they are asking. Calculate the operating income. This is my operating profit, right? Yet we have not deducted interest and preference dividend. So it is my operating profit. Operating profit, calculate operating income and operating income as to percentage of revenue. So operating income as to percentage of revenue. So 1350 operating income as a percentage of revenue will be operating income divided by revenue multiplied by 100, because we want to find out answer in percentage. 1350 divided by 79,350 multiplied by 100, which is 1.70 percentage. 2,10,060 15,060 divided by 2,10,060, which is multiplied by 100 is 7.17 percentage. $3,990 divided by 129 will be 3.29 percentage. If you have not understood operating income in finance before, please try to understand what does this ratio means. If you sell rupees 100 lemons, you will be getting operating profit of rupees 1.70. If you sell rupees 100 of grapes, you will be getting operating profit of rupees 7.17. If you sell rupees 100 of papaya, you will be getting rupees 3.29 as operating profit. So which is a good line? Grapes is a good line because it is giving you highest operating profit if you sell 100 rupees of grapes. Per 100 rupees, it is giving highest operating. You have absorbed your overhead based upon one rate or four rates? One rate, is it? All right. And it is one rate and it is based upon COGS. So it is a traditional costing method. One rate is used, but the rate is unique. We have not learned it in overhead chapter also and this chapter also. The rate is overhead is absorbed based upon COGS. That is percentage of COGS. All of you agree it is a traditional method? Yes? Because you are using one absorption rate or four absorption rate? One absorption rate. There are more than four activities. 1, 2, 3, 4 and 5. See, one of the disadvantage of absorption method or absorption costing or traditional method, bottle returning cost happens only in actually happens only in lemon. So you might be selling lemon juice and you might be giving them bottles and it is returnable. So you will have to bring back the bottle and it will incur some transportation cost. So it is bottle returning cost. It happens only in lemon. Here that cost also you are distributing to all three products. Should it be distributed to all three products? No. So this is the major loophole of this traditional method, whereby all the overhead, say some of the overhead might be used only by lemon and grapes, then it should be distributed only to lemon and grapes, and that will be overcome by ABC costing. Again, same thing. Particulars, lemon, grapes, papaya, total. I can just find out revenue 79,350, 2 lakh 10,060, 129,90, 4 lakh 10,400 minus COGS 60,000, 1 lakh 50,000, 90,000. Total is minus other support cost. I am taking first other support cost. Which is the first other support cost is returning of empty bottles to the stores. Bottles returned rupees 1200. Bottles returned. It is 1200. Tell me, should I give it to L, G or P? Only L. Because it is directly attributable to L, it should be given only to ordering. See, now you don't have to find out your cost driver. It is already given in the question that this will be your cost driver. Ordering cost is first how much? 15,600. Ordering cost is 15,600. Should be distributed on the basis of number of orders. I will be distributing on the basis of number of orders, but first I will be finding out total cost drivers that are already given. What will be total cost drivers? It is given. And then I will be finding out absorption rate per activity, ordering, delivery, self-stocking and customer support. I am having Excel sheet. You will have to do it on your own. What is total ordering cost? You can even take it from me. Total ordering cost is 15,600. And total number of orders are 156 orders. Fifteen thousand 600 and 156. It will be 100. 25,200, 315. Seventeen two 80. 864. 30,720. Number of items sold is 153,600. Total of items sold 153,600. It is 0.2 rupees per item. So this will be ordering cost will be per order. This is per number of deliveries, delivery. This is per hour and this is per unit. So how many number of purchase orders are there? I have taken ordering cost, right? Number of purchase order in lemon is 36, 84 and 36 in papaya. 36, 84, 36. What is cost per order? 100. Cost per order is rupees 100. So this will be 3,600 will be distributed. 8,400 will be distributed to this. And 3,600 will be distributed to this. So 15,600 will come over. Second cost is delivery cost 25,200. Delivery cost 25,200. How many number of deliveries are there in all three products? 30, 219 and 66. 30, 219 and 66. I have already found out cost per delivery is or absorption rate per delivery is 80. It is rupees 80. So this will be distributing 2,400. 219 into 80. 219 into 80. 17,520. 66 multiplied by 80. 5280. Third cost is shelf stocking cost 17,280. It is 17,280. How many hours of shelf stocking you have done in lemon? 54, 550 and 270. It is 54, 540 and 270. And what is cost per hour is rupees 20. So lemon will take 54 into 20, 1080. 540 into 20 is 10,800 and 270 into 20 is 5,000. Last cost is customer support cost is 30,720. Customer support cost 30,720. And it is based upon number of units sold. So number of units sold are 12,600. 1,10,400 and 30,600. And what is the absorption rate? We have already found out it is 0.2 rupees. That is 20 paisa per unit sold. It is 0.2 rupees is absorption rate. 12,600 into 0.2. 2520. 1,10,400 into 0.2. 22,080. 30,600 into 0.2. 6120. Total will be, of course, 30,720. I will be finding out operating profit. You can just subtract all the columns. You will be getting answer of operating profit. It is 8550 1260 10,590. Total is 20,000. Operating profit is 8550 1260 10,590. Why operating profit in both methods are same? Total will remain same. You are just changing the method of distributing the overheads, right? I need to find out the same answer which I have found out before. Percentage on revenue. That is operating profit percentage on revenue, which is 8550 divided by 79,350, which is 10.78. Grapes 0.60 percentage, and papaya 8.75%. See, the process is important as far as your examination is concerned, but the essence of the question should be absolutely clear. If you actually go to a mall, if you actually are hired as a cost accountant of a mall, see what was traditional system doing. When you ask to a manager, he will say grapes is our best product because it is giving how much operating profit per 100 rupees? 7.17 rupees per 100 rupees. So grapes is valued like anything because other is giving 1.70% and other is given 3.29%. Just by changing the method of absorption of overhead, your lemon is giving you how much percentage? 10.78, and grapes is giving 0.60 and papaya is giving 8.75. Believe me, had you found out this percentage, overall will remain same. Overall is always going to remain same because this is same and this is same in both the methods. But the percentage of individual product changes, right? Suppose papaya was, this grapes was having minus 0.60. What does this mean? This is not the good product to keep in your showroom. Yes, as far as finance is concerned, as far as money management is concerned, as far as marketing is concerned, if the grapes is necessary in the mall, you should keep it. But you should understand that you are incurring losses by keeping and selling grapes, right? This is importance of ABC. And this is what is asked. Compare both the systems. We have just orally compared it. You will have to write down, as far as answer 3 is concerned, you will have to write down your answers. You will have to say that in traditional system, grapes was having higher operating profit as compared to revenue. And as per ABC, lemon is having higher operating profit as compared to revenue. C 5.5. ABC Bank is examining the profitability of its premier account. Now see, ABC is used even in banks, right? So in service sector also we will be using ABC. A combined savings and check account depositors receives 7% annual rate of interest on their average deposit. So the person who keeps fixed deposit in a bank, they will be getting 7% per annum. ABC Bank earns an interest rate spread of 3%. The difference between the rate at which it lends the money and rate it pays to depositor by lending money for home loan purpose at the rate of 10%. So it is very simple. They lend the money at 10%. They take the money at 7%. So they will earn 3%. This is the business of the bank, right? To borrow money and to lend money. And they get a spread of 3%. The premier account allows depositors unlimited use of services such as deposits, withdrawal, check facilities, and foreign currency drafts. Depositors with premium account balance of rupees 50,000 or more receives this unlimited free use of services. Depositors with minimum balance of less than 50,000 pays rupees 1,000 a month service fees for the account. ABC recently conducted an activity-based costing studies of its services. The use of this services in a year by 3 customers is as follows. Try to understand. Deposit and withdrawal with teller. Teller is cashier. Deposit and withdrawal with cashier. What is this? Activity based cost per transaction. It is ABC absorption rate directly given. Otherwise, how this is given? Total cost will be given and total activity driver or cost drivers would be given. You will have to divide it and then find out the absorption rate. Here the absorption rate is already given. What is the absorption rate for deposit and withdrawal with teller services? 125. How much customer X does in a year? 40 deposits or withdrawal. Customer Y, 50 deposits or withdrawal. Customer Z, 5 deposits or withdrawal. How you will allocate cost to customer X? Can you tell me? 40 into 125. Why? 50 into 125. So believe me, this question is more of multiplication rather than ABC, right? There will be more and more of multiplication. Deposit and withdrawal with automatic teller machine. The rate is 40 rupees per transaction. Deposit withdrawal on pre-arranged monthly basis, rupees 25. Bank checks written, rupees 400. Foreign currency drafts, 600. Inquiries about account balance, rupees 75. See, these are all the services which banks gives to customer, and for that bank will be having an overhead, right? They hire one person for one customer, or they hire one person for all the customers. So suppose it is a cashier. You should absorb the cashier cost to all the accounts and not to one account, right? And what is the good base of is deposit and withdrawal by teller. Inquiries about account balance is 75. Average premier account balance for the year. Customer X 55,000, customer Y 40,000, and customer Z is having a balance of 12,50,000. Assume customer X, Y, X and Z maintains a balance above rupees 50,000. X and Z, they will be maintaining balance above rupees 50,000, whereas Y always has a balance of 50,000. Compute the profitability of customer XYZ premier accounts at ABC Bank. What evidence is there of cross subsidization among the 3 premier accounts? Why might ABC Bank worry about this cross subsidization if the premier account product offering is profitable as a whole? What changes would you recommend for ABC Bank's premier account? So these are the three questions that we are going to solve. So first, how we will find out overhead cost of each customer X, Y and Z? How we'll find out overhead cost of X? 40 into 125, 10 into 40, 0 into 25, 9 into 400, 4 into 600 and 10 into 75. This will be overhead cost of customer X or total cost of customer X. For savings account, this is the savings and fixed deposit account. This is the total cost for customer X. Customer Y, how I will find out? 50 into 125. So let me find out first cost of customer X. X, Y and cost of customer X will be 125 into 40 plus 40 into 10 25 into 0. If I don't write down, it is all right. 400 into 9, 600 into 4, 75 into 10. So it is 125 into 40 is equal to M plus 40 into 10 is equal to M plus 400 into 9 is equal to M plus 600 into 4 is equal to M plus 75 into 10 is equal to M plus. MRC is 12,150. What will be cost of customer Y? I hope exactly you are getting how we are actually distributing the overhead based upon absorption rate. So customer Y, how much deposit or withdrawal he is doing? 50 times. What is the cost per one time is 125. So I am finding out for customer Y, 125 into 50 plus 20 into 40 plus 12 into 25 plus 3 into 400 plus 1 into 600 plus 18 into 75. I can solve it by M plus 125 into 50 is equal to M plus. You are solving it with M plus? Yes, you should solve it with GT. $10,000. For Z, the cost will be 5 into 125, 125 into 5 plus 40 into 16 is 16. 25 into 60 400 into 2 600 into 6. 75 into 9. What is the answer? 7840. So, if how much services of bank X is using 12,150 rupees. Banks cost 12,150 rupees for giving service to X. For service to Y 10,500 and for service to Z 7,840. How much income? So let me write down cost to bank for X, Y and Z is 12,150 rupees, 10,500 rupees and 7,840 rupees. What is the revenue of bank from this customer? Alright. How much daily average balance does X keeps? 55,000. Or what is the average balance of X? 55,000. And it is written that X and Z always maintains above 50,000. So if he maintains an average balance of 55,000 per annum, the revenue of bank will be 55,000 into 3%. All of you agree? This money they have borrowed from this customer will have to pay him 7% as fixed deposit rate. This money will be given as home loan of 10%. So they will be earning 3% margin. For Y, it is 40,000 into 3%. And for Z, it is 12,50,000 into 3%. So 55,000 into 3% is 1650. This is 1200. And this is 12,50,000 into 3%, which is 37,500. So black color is cost for the bank. Blue color is a revenue for the bank. Alright. Let us understand this. The Premier account allows depositor unlimited use of services. So X, Y and Z are not charged for this services. So only revenue for the bank is this. If check withdrawals, check facility, foreign currency draft, everything is free. Depositors with premium account balance of 50,000 or more receives unlimited free use of services. Which customer are having 50,000 or more balance? X and Z, and it is written it remains 50,000 or more. So other revenue of the bank from X and Z will be 0. A depositor with a minimum balance of less than 50,000, in our case Y, pays 1,000 a month service fees for an account. So how much service fees Y will be paying? 1,000 into 12. Why? 1,000 is per month. So 12,000 rupees service fees he will be paying. Net revenue slash loss. In X customer, it is 12,150 minus 1650. It is a loss of 10,500. Here also in Z also it is loss 37,500. No, it is profit minus 7,840, which is 29,660. And here also it is profit. It is 13,200 minus 10,500. 2007. So two customers, the bank is running in net profit. One customer, it is running in losses. Total revenue from all this customer will be 29,660 plus 2,700 minus 10,500, 21,860. This is answer number 1. Compute the profitability of customer X, Y, and Z premier account at ABC Bank. Alright. What you should do, if you see this situation financially, what you should do? I think you should remove the account of customer X. Call customer X, close him, that you close your bank account. Make his service limited. Then service of Z will be also limited. Yes or no? Z is the profitable customer or is the non-profitable customer? Why is the profitable customer? Because say when he came to bank, we told him, if your average balance is greater than 50,000, we will give you free checkbook, we will give you free deposit, free withdrawal, free ATM, free credit card, everything we will be giving you free. But your average balance should be greater than 50,000. So we had which customer? Z, who always kept a balance greater than 50,000. Not only 50,000, he kept 12 lakh 50,000. See, if this type of offer was not in our bank, he might have gone to other bank. See, he is actually losing money. But what people understand is free. If say the customer whose average balance is remaining 12 lakh 50,000, believe me, he is a foolish person. Why is a foolish person? He is foregoing his interest cost, except he has kept his money in fixed deposit. Except he has kept his money in fixed deposit. But in fixed deposit, he will not require any services. So he will keep fixed deposit where the fixed deposit rate is higher. Why over here, right now fixed deposit also has become like savings account. You know flexi fixed deposit? What is it? You can withdraw it anytime, you can enter it anytime. So if today I am having 1 lakh rupees excess, I can put 1 lakh rupees in fixed deposit. Tomorrow if I want that 1 lakh rupees, I can withdraw it online. Of course, I will not be going to bank because bank will take time. So this customer will be gone if we remove this facility. See, facility you cannot give calling one customer and tell them that this is the offer of bank for you. Bank will create one offer that any person above an average of 50,000 rupees will be getting all these facilities free. So should we remove customer X? Then how much balance he is keeping? 55,000. Tell your head office, tell your headquarters, or if you are sitting in headquarters, tell them to increase the limit of this offer. What is right now? 50,000, make it 70,000, make it 1 lakh. Then customer X would not be falling under this category and he will be paying you 12,000 rupees. And if he pays you 12,000 rupees, see, all the costs are approximately 12,000, near about 12,000 or less than 12,000, right? This is 150 more. But still, you will be recovering that 150 rupees from that 12,000 and you will be getting some interest on your money also. So your cost might be recovered. What is the another way out? Make slab. 0 to 50,000 service will cost you this much. 50,000 to 1 lakh services will cost you this much. Greater than 1 lakh services will be free. Alright. So these are the ways in which X loss, which is right now covered by Y and Z, X loss we can reduce to minimum, or even we can make customer X as a profitable customer. Let us understand second and third question. We have already discussed it, but let us understand in technical way. What evidence is there of cross subsidization? What is the meaning of cross subsidization? Take money from her and subsidize her. Take money from her and subsidize her. Facility is given to which customer? XYZ. It is given to all three customers. We are taking money from Z and we are providing services to X. We are taking money from Z. From Z we are profitable. Why we are able to give this free services? We are net profitable or net loss? Net profitable. So we will be continuing this type of services. So who is getting freebies? Mr. X. Alright, this is known as cross subsidization. Taking subsidy from one person, giving it to another person. And this is a famous word in banking. Cross subsidization. Whole of the credit card business works on cross subsidization. Do you know how much interest bank charges if you pay credit card bill on time? 0%. What is the interest rate for credit? Say I am having ICICI Bank credit card. If I get a limit of 50,000, if I use that 50,000, they will be giving me that 50,000 rupees for 1 month. They will charge 0 rupees interest. They will charge 0 rupees fees. They give me credit card free of cost. There is not even yearly fees in credit card. So what they earn? Exactly. Understand, there are people who pays late. There are people who uses their EMI system. From them, they will be earning more, and from me, they will be losing money. But net, they will be earning money. Alright. Now, why to give to Jay Pandya? If he is not a profitable customer, try to target the customers who will be using EMI. Try to target the customers who will be paying you late and who will be giving you interest on late payment. Yes, if you pay late, they will directly charge 500 rupees. Even if your balance or your outstanding amount is say 5,000, they will directly charge how much rupees? 500. That is 10% interest. Are you getting it? So, what they will be earning from some customer. Some customer pays on time and they will be earning 0 from it. There will be cross subsidization, but the net business of credit card is in profit. If all the people of credit cards start paying on time, believe me, there is no business like credit card business, right? There is no profitability in credit card business. It is always cross subsidization. What evidence is there of cross subsidization among three premier accounts? X is receiving subsidy, Z is paying subsidy more. Why might ABC Bank worry about this cross subsidization if the premier account product offering is profitable as a whole? This is what we have discussed, right? See, you go to a bank and says X is non-profitable. What bank is saying you? Totally we are earning profits. Please understand, long term, this is not a good strategy. Mr. Z will come to know that I should keep my anything above and over and above 50,000 somewhere else. Then Z will be keeping minimum average balance of say 55,000. You will be earning 2,700 from Y, 2,700 from Z, and X you will be incurring how much cost? 10,500, and net you will be losing your money. If you want a sustainable business, which is a long-term business, then you should worry about cross subsidization even if your net answer is positive. What changes would you recommend ABC's Bank's Premier account? This we have discussed, right? Increase the limit, increase the charges for 50,000 to 1 lakh and so on. These are the remedies to reduce the cross subsidization. We are going to next question. C 5.6. MNO Limited manufactures two types of equipment, A and B, and absorbs overhead on the basis of direct labor hours. It absorbs the overhead basis on direct labor hours. Which method? A traditional method or absorption system of costing. The budgeted overhead and direct labor hours for the month of March 2019 are 15 lakhs and 25,000. I can find out overhead absorption rate based upon traditional system. How to find out? Rupees 15 lakhs divided by 25,000 hours. So 15 lakhs divided by 25,000 is rupees 60 per labor is blanket rate. It is good to first read full question. Let us not solve it. The information about the company's product is as follows. Equipment A, B, budgeted production volume is 3,200 units, 3,850 units. Direct material cost is 350 per unit, 400 per unit. Direct labor cost, 3 hours, rupees 120 per hour is equal to 360 per unit. What does this mean? A equipment takes 3 labor hours to manufacture, right? And for that 3 labor hours, you will have to pay 120 rupees labor. And so, total cost per unit will be 360. And equipment B takes 4 hours at the rate of 120. So, cost per unit in equipment B is 480. Overhead of rupees 15 lakhs can be identified with following 3 major activities. So this is how the 15 lakhs is divided. 3 lakh order processing, 10 lakh machine processing, 2 lakh product inspection. These activities are driven by number of orders processed, machine hours worked and inspection hours respectively. So cost driver, they are telling us, even if they have not told us, we would be knowing order processing should be divided in which ratio? Order processed. Machine processing, machine hours worked, and product inspection hours required. Prepared a statement showing the manufacturing cost per unit of each product using absorption costing is same as traditional, assuming the budgeted manufacturing volume is attained. I am finding out by traditional method, there are 2 products A and B. How many units of A you manufacture? 3,200 units of A and 3,850 units of. And I am finding out, instead of total, I am finding out for A and B. Per unit. Instead of total, I am finding out per unit. Direct material is 350, 400. Direct material is 350 rupees, 400 rupees. Direct labor is 360, 480. So prime cost is 710 and 880, and it is also per unit, right? And let us go to, we are using a traditional system. All right. I will have to do a working note for A as well as B. First, what is our absorption rate? Rupees 60 per labor hour. This is our absorption rate. How many labor hours will be used in A? How many labor hours is used in A? 3 hours. But 3 hours is per unit. 3 hours is per unit. So what will be total labor hours? 3,200 into 3. 3,200 is a unit. Don't do this working note. 3,200 into 3. This will be total labor hours for manufacturing 3,200 units of A. What is the answer? 9,600 hours. What will be absorption rate? 60. 9,600 into 60. 5,76,000 rupees. Now this is per unit or total? This is total. Divided by 3,200. It is 180. Right now I am finding out total or per unit? Per unit. I am absorbing also overhead cost per unit. What is per unit labor hours? 3. What is per unit absorption rate? 60. What will be per unit absorption total cost? 180. Right. So I need not do this working note. Right. Because I want absorption only per unit. Sir, why we are finding out per unit only? Because in question it is given find out per unit and total is not required by that. See, from this chart you cannot know how much overhead is absorbed by A. Per unit you will come to know, but how much overhead is absorbed by A, that you will not come to know. You will have to multiply it with 3,200. How much overhead will be absorbed by B? 4 into 60 will be 2. This is 890 rupees. This is 1120 rupees per unit under traditional method is my absorption cost. ABC. Product A, product B, 3,200 units, B, 3,850 units. Can I take prime cost per unit as same? 710, 880. This is nothing but prime per unit. Plus overhead under ABC. Alright. I will have to find out absorption rate for orders, for machine and for product inspection. Right. And as usual, I am having a chart whereby I can just write down total figure and I will be getting absorption rate. And it will not be even much difficult for you also. What is total order processing cost is 3 lakhs. It should be divided based upon order process. So it is total 600. The cost driver rate would be 500 per order. Machine processing total cost is 10 lakhs. Machine hours worked is 50,000. And the absorption rate will be 20. Total inspection cost is 2 lakhs. Number of inspection hours is 20,000. Cost driver rate will be 10. I will be having order processing cost, machine processing, product inspection. OPC cost, A is 400 and B is 200. 400, 200. What is cost per order? 400 into 500 and 200 into 500. This will be 2 lakh and 1 lakh. Sir, in per unit column, you are writing down total. Yes, I will convert it into per unit, write down in blue color pen. And then I will total only blue color pen, right? This is total, I agree. This is total cost. What will be total machine processing cost? How many machine hours are used by A and B? Machine hours work 22,500, 27,500. 22,500, 27,500. And the rate is 20 rupees. Absorption rate is 20 rupees for this particular cost. 22,500 into 20, which will be 4,50,000. 27,500 into 20. 5 lakh. And this is total cost which will be absorbed by A and B. Product inspection, 5,000 hours, 15,000 hours. 5,000 hours, 15,000 hours. The absorption rate is 10 rupees. So it will be 50,000 and this will be 1,50,000. I am finding out per unit rate of A and B. What is total overhead absorbed by A? 2 lakh, 4 lakh, 50,000 and 50,000. That is 5 lakh, 7 lakhs. Total overhead absorbed by B. This is 6 lakh, 7 lakh and 8 lakh. Total should be 15 lakhs. Ultimately, we are dividing 15 lakhs rupees between A and B. Whatever might be the method. I am finding out per unit overhead absorbed. Per unit overhead absorbed. 7 lakh divided by 3,200. Which is 218.75. And 8 lakh divided by 3850. 207.79. What will be total cost per unit? Total of prime cost and overhead, which will be 710 plus 218.75. 928.7. 880 plus 207.79. 1087.79. Had I used traditional method, A, I would have undercosted and B, I would have overcosted. Because I am using blanket rate to distribute the overhead and not activity based rate to distribute the overhead. Prepare a statement showing the manufacturing cost that we have done. Determine cost driver rate and prepare a statement showing the manufacturing cost per unit of each product using activity based costing. See, they required only cost per unit. Alright, so we have not done total. Manufacturing volume is 18. M&O Limited selling price are based heavily on the cost. By using direct labor hours and application base, calculate the amount of cost distortion under costed or over costed for each equipment. If you use a traditional system, for A you will be under costing, and you will be under costing by how much? That is what they are asking. What is the cost distortion? You will be under costing by how much? 928.75 minus 890. It is 38.75. And it is 1087.79 minus 1120. 32.21. And if your selling price is heavily dependent upon your cost, you should consider ABC costing will give you true picture of your cost of each product. We are going to next question, which is 5.7. PQR Limited has decided to analyze the profitability of its 5 new customers. It buys the soft drink bottles in a case of rupees 45 per case and sells them to the retail customer at a list price of 54 per case. So per case they are earning 9 rupees. Per case they are earning 9 rupees. The detail pertaining to 5 customers are given below. Number of cases sold to A is 9360, B 14200, C 62,000, D 38,000 and E 9,800. Listed selling price is 54 for all, right? Actual selling price. So actual selling price differs for all the customer. What is actual selling price? 54, 53.4, 49, 50.20 and 48.60. Number of purchase orders are given, number of customers visit is given, number of deliveries is given, kilometer travel per delivery is given, number of expedite delivery is given. This is delivery which is in a very short period of time. Its 5 activities and their cost driver are as under. Activity, order taking. What is this? Cost driver. Rupees 200 per purchase order. What is this? Cost per cost driver. We will have to use Excel sheet or not? No. The directly cost driver is given. We can directly give cost to A, B, C and D. You are required to compute the consumer level operating income of each of the 5 retail customer by using the cost driver rate. So no absorption costing, no traditional method, directly ABC. Examine the result to give your comment on customer D, comparison with C, and on customer E, comparison with customer E. We don't know what type of question they have asked, but let us solve it. A, B, C, D, E, and particulars. We always take a judgment whether total column is required or not. Here there is no requirement of total column. It will be just an additional column which you are drawing. Listed selling price is all right. What is actual selling price? We are interested in profitability. Listed selling price is not important. Actual selling price is important. It is 54. All answers are in rupees. 54. Sorry, 53.4. C is 49, D is 50.20 and E is 48. Minus cost per cases is 45. It remains the same in all. Margin per unit, this is 9. This will be 8.4. This is 4. This is 5.20 and this is 3.60. Number of cases sold, 9360, 14,200, 62,000, 38,000, 9,800. Total margin revenue or direct revenue, we can multiply this two. Total margin revenue or total direct revenue, 9360 multiplied by 9. 84,240. 14,200 into 8.4. 1,19,280. $62,000 into 4. 2,48,000. 38,000 into 5.20. 197,600. 9,800 into 3.6. 35,280. This is total margin revenue minus all overhead cost. Order taking cost, the cost name will be like this. Order taking cost, customer visits cost, deliveries cost, product handling cost, expedite delivery cost. How I'll be doing? Number of purchase order no need to write it down again. Multiplied by 200 is good answer. Number of purchase order multiplied by number cost per purchase order will be nothing but the total cost for customer A, B, C, D and E respectively. So 30 into 200 is 6,000. 50 into 200 is 10,000. 60 into 200 is 12,000. 50 into 200 is 10,000. 60 into 200 is. How to find out customer visit cost? Number of customer visit multiplied by cost per each visit. What is cost per each visit? 300. So 4 into 300 will be 1200. 6 into 300 is 1800. 12 into 300 is 3600. 4 into 300 is 1200. And 6 into 300 is 18. How to find out a delivery cost to each customer? Number of delivery multiplied by per delivery kilometer traveled. That is rupees 4 per delivery kilometer traveled. Actually, they should have given it is cost per delivery. It is not cost per kilometer traveled. Otherwise, you cannot directly multiply it. So this multiplied by 4. 2 4s are 8 is 80. It is 240. 480. 320. 160. Just a minute, we will have to rectify this. It is number of deliveries, kilometer traveled per delivery. Alright. And this is rupees 4 per delivery kilometer traveled. Yesterday's point that you are not knowing. Alright. How to find out cost? Deliveries cost. What is number of deliveries? 20. In each delivery, how many kilometers are traveled? 40. So 20 into 40 will be how much? 800. So 800 kilometers our agent would have traveled to deliver goods to Mr. A. And what is a per delivery kilometer traveled cost? Rupees 4. So this will be 20 into 40 multiplied by 4. This is incorrect. We will be rectifying it. 20 into 40 is 800. 800 into 4. It is 3200. This is 720 into 4, which is 2880. It is 1200 into 4, 4800. This is 1600 into 4, 6400. 2400 into 4, 9600. How I have done this? 3200. It is the 20 deliveries are done, and in each delivery 40 kilometers is traveled. So how many delivery kilometers is traveled? 800 delivery kilometers is traveled. Operating costing. And what is cost per delivery kilometer is 4. So 800 into 4 is 3200. Product handling. It is 2 per case sold. So directly 2 into 9360. 9360 into 2, 18,720. 14,200 into 2, it is 28,400. 62,000 into 2, 1,24,000. 38,000 into 2, 76,000. 9,800 into 2, 19,000. Expedite deliveries, rupees 100 per such delivery. Number of expedite deliveries is 0, 0, 0, 0 and 2. So 2 into 100, only e customer is having expedite delivery of rupees 200. I am finding out the total overhead cost. It is 6,000 plus 1,200 plus 3,200 plus 18,720. 29,120. This is 11,800 plus 2,880 plus 28,400. 43,080. This is 15,600 plus 4,800 plus 1,24,000. 1,44,400. This is 11,200 plus 6,400 plus 76,000. 93,600. 13,800 plus 9,600 plus 19,600 plus 200, which is 43,200. I am finding out answer of revenue from each customer. It is 84,240 A minus B. $55,120. 1,19,280. $76,200. 2,48,000 minus 1,44,400. 1,03,600. $197,600 minus 93,600. 1,04,000. 35,280 minus 43,200. Negative 79. What is the next question? Compute the customer level operating income of each of the 5 retail customer by using cost driver rate. That we have done. Examine the result to give your comment on customer D in comparison with customer C. Let us compare D and C. C, we are selling 62,000 units. D, we are selling 38,000 units. Approximately, still see 38,000 and 62,000. Number of units sold is greater by say 62 minus 38. 24. Still they both are earning net amount same profit, right? What is the profit in this? 1,03,600. What is the profit in this? 1,04,000. So there is the gap of only 4. Even if number of units sold are greater by a much larger amount, the profit has increased only by 400 rupees as far as C and D is concerned. They are not telling us specifically what to do, but the comparison can be done. And on customer E and customer A. Customer E and customer A. How many units E is purchasing from us? We are selling it to customer E, 9,800. And customer A, we are selling 9,360. So we are selling more to customer E and less to customer A. Still customer A is having a good amount of profit. 55,120. And customer E is incurring net loss for us. Why? Why customer even if we are selling him 9,800 rupees, why we are incurring losses from him? Number one, we are giving him huge discount. See, what is the direct income from him? 3.6. What is direct income from A? Per unit is 9. Why it is so? We have reduced the selling price to 48.60. So we have reduced his selling price. And it is possible he might be using more amount of overhead comparatively. Right? He is using, yes, see, 3,200, 9,600. So he is using more amount of overhead services. So he is using more services. We are giving him more discount. So net he is a loss making customer for us. This is the normal comparison which you should be making. So if someone asks you what you have learned today, you should tell them multiplication. The C 5.8. ABC Limited is engaged in production of three types of fruit juices: apple, orange and mixed fruit. The following cost data for the month of March 2020 are as under. Unit produced and sold is given 10,000, 15,000 and 20,000. Direct material per unit and direct labor per unit is available. Number of purchase order, number of delivery and shelf stocking hours is available. Overhead incurred by the company during the month are as under: ordering cost, delivery cost, shelf stocking cost. Calculate cost drivers rate. Calculate a total cost of each product using ABC. And it is 6 marks question of November 2020. This is appearing in classwork just because it is a very recent question, right? Otherwise, this would not have appeared in classwork. We are just going to find out first cost driver and cost driver rate. We should find out cost driver total. Number of purchase order will be 34 plus 32 plus 14. This is 80. This is 110 plus 64 plus 52. 2 to 6. 110, 160, 170. Is 4. I can use my Excel sheet. And find out the answer. Total ordering cost is 64,000. Cost driver is number of orders and total number of purchase order is 80. Cost driver rate will be 800. Total delivery cost is 158,200. Total number of deliveries is 226. So cost per delivery will be 700. Shelf stocking cost is 87,560. Shelf stocking hours total are 440. So cost per shelf stocking hour will be 199. 800, 700 and 199 are cost driver rate. 800, 700 and 190. I'm just writing it so that I should not go again into Excel sheet. Apple, orange and mixed fruit. Direct material. It is 8 per unit. I'll be first writing down 10,000 units. 15,000 units. 20,000 units. What cost they are asking me? calculate a total cost. So I should not do per unit only. So material per unit is 8. So material cost will be 80,000. In case of apple. In case of oranges, 90,000. And this will be 1 lakh. 20,000 into 5. Just 1 lakh. I am doing number of units multiplied by direct material cost per unit. Direct labor per unit. So it is also given per unit. So direct labor will be 50,000. It is direct labor per unit multiplied by number of units. 4 into 15,000. 20,000 into 3. 1,30,000 is prime cost. 1,50,000 for oranges is prime cost, and 1,60,000 for mixed fruit is prime cost. Plus overhead. Overhead will be 3. Ordering cost, delivery cost, shelf stocking cost. Ordering cost will be 800 per order, and number of purchase order are 34, 32 and 40. 34, 32 and 40. And the cost driver rate is 800. 800 and 800. So ordering cost will be 34 into 800, 27,200. 32 into 800, 25,600. 14 into 800, 11,200. Delivery cost. Number of deliveries are 110, 64, 52. 110, 64, 52. Cost driver rate is 700 into 700 into 700 into 700. So total cost will be 110 into 700, 77,000. 64 into 700, 44,800. And 52 into 700, 36,000. Shelf stocking hours are 110, 160, 170. 110, 160, 170. And cost driver rate in shelf stocking cost is 199 per hour. So 110 into 199, 21,890. 160 into 199, 31,840. 170 into 199, 33,830. I will be getting total 1,30,000 plus 27,200 plus 77,000 plus 21,890. 2,56,090. One lakh 50,000 plus 25,600 plus 44,800 plus 31,840. 2,52,240. 1,60,000 plus 11,200 plus 36,400 plus 33,830, which is a 241,430. This was 5.8, nothing but multiplication, right? You just need to find out cost driver rate and then distribute the cost to various products. Not even comparison between traditional and C 5.9. ABC Limited manufactures the three products X, Y, and Z using the same plant and resources. It is as given the following information for the year ended 31st March 2020. Production quantity is given of X, Y, and Z. Direct material, it is per unit. Cost per unit, direct material and direct labor per unit is given. Budgeted direct labor rate was rupees 4 per hour and the production overhead shown in table below were absorbed to product using direct labor hours. Right. So what is this budgeted direct labor rate was rupees 4 per hour? It is this, right? I will be getting number of hours if I want to find out. Budgeted direct labor rate was rupees 4 per hour. What is the total direct labor cost per unit? 18. So 18 divided by 4. 4.5. 4.5 hours will take direct labor to manufacture X. Company followed absorption costing method based upon direct labor. However, the company is now considering adopting activity-based costing. Material procurement, number of orders, material procurement was 50,000, number of orders was 25 units for each product. Alright. Setup, 40,000, all three products are in produced in a production run of 48 units. Quality controlled 28 to 40 should be divided in number of inspection done for each production run. Maintenance 1,28,000 maintenance hours. Total maintenance hours were 6,400 and was allocated in ratio of 1:1:2 between X, Y, and Z. Calculate the total cost per unit of each product using absorption costing method. Calculate the total cost per unit of each product using activity-based costing method. Alright, here finding out direct labor hours will be typical. I am finding out first, I am doing absorption costing. X, Y, and Z. What is labor cost per unit? Direct labor cost per unit is 18, 20, and 30. What is labor rate? Is rupees 4 per hour. What does it mean? How much direct labor hours per unit of X takes? It is 18 divided by 4. 4.5. 20 divided by 4. 5. And 30 divided by 4. 7.5. What is this? Can you tell me 4.55 and 7.5? It is direct labor hours to manufacture X, Y, and Z respectively, right? So these are direct labor hours. How I have found out? They have given us per unit cost and they have given us per unit rate. So we can easily find out direct labor hours. So how this 18 would have come? 4.5 into 4. And total direct labor hours. Total direct labor hours. How many units of X are manufactured? 1200 units. Y 1440 units. And Z 1968 units. So what will be total direct labor? 1200 into 4.5. 5400 hours would require to manufacture X 1440 into 5. 7200 labor hours will be required to manufacture Y. 1968 multiplied by 7.5. 14,760. Labor hours will be required to manufacture Z. Total labor hours will be total of all three. 5,400 plus 7,200 plus 14,760, which is 27,360. What are total overheads? Is the total of all this four, which is 90,000 plus 28,240 plus 1,28,000. 2,46,240. 2,46,240. 246,240. Divided by total labor hours 27,360 will be is equal to rupees 9 per direct labor hour. What is this? A blanket overhead rate and blanket absorption rate. What they are asking me, per unit or total? They want calculate the total cost per unit of each product using absorption costing. Should I do per unit or calculate the total cost per unit of each product using ABC? Let me find out per unit only. Cost per unit of X, Y, Z. Direct material 90, 84, 176. Direct labor I have written once 18, 20 and 30. This is 108. This is 104. This is 206. Is the prime cost plus overhead. All right. See, I can do this. If you don't understand, you can do this. You are having labor hours for X multiplied by you are having absorption rate divided by number of units. I will be getting answer per unit. Is it all? 5,400 into 9 gives me total overhead absorbed divided by 1,200 gives me per unit overhead absorbed. Instead of that, what are direct labor hours per unit? What is direct labor hour per unit? 4.5. I can directly do this. 4.5 into 9. 5 into 9 and 7.5 into 9. I will be getting absorption per unit. $40.5. 5 into 9 is 45. 7.5 into 9. 67 point. Sir, how you have got 40.5? If you don't understand, please try to concentrate. I have found out overhead absorbed based upon labor hour. What is my labor hours in X? 5,400 labor hours into 9. This will be 5,400 into 9 will be 48,600 total labor overhead will be absorbed by X. How many units of X are manufactured? 1200. So divided by 1200 because I want answer per unit. So 48,600 divided by 1200 will be 40.5, which I have directly got. And this is blanket absorption rate, so I can directly find out the answer. It is 148.5. This is 149. This is 273 point per unit. Under absorption. We are going under ABC. For ABC, the cost drivers, believe me, are somewhat difficult to find out. First, I can take prime cost per unit, X, Y, Z. I can directly take prime cost per unit which is 108, 104 and 20. See, it is a good idea here to find out total, right? Why? Overhead cost I will be getting in total, then I will be dividing it by number of units. I will be getting per unit answer. What you can do is I can directly find out prime cost total multiplied by units. What are units of X? 1200, 1440 and 1968. So total prime cost will be 1200 into 108, 129, 800, 1440 into 104, 149, 760, 1968 into 206. Four lakh 5,408. Can you verify 129,800 is correct or not? It is correct, right? $600. I am absorbing overhead. I am not having right now overhead recovery rate also. Material procurement, total cost is 50,000. Cost driver is number of orders. Number of orders were 25 units for each product. Can anyone tell me how to distribute this? Use the language, don't see the answer. Number of orders were 25 units for each product. So X, how many number of orders are there? 25. Y, 25. And Z, 25. Total orders, 75. So total orders are 75. I will be getting cost driver rate, which is 50,000 divided by 75. This is 50,000 and total cost driver for material procurement is 75. It will be 666.67. Let me first finish this. I am writing cost also. So what is the total cost of material procurement? 50,000. material procurement cost is rupees 50,000. Do you understand this cost should be divided equally to all three products? Right or wrong? This cost should be divided equally to all three products. Sir, no, we should do 25 into this is the 666.67. The answer will be same, right? 50,000 divided by 3, 16,667, 16,667, 16,667, 16,660. No, sir. Previously, we were doing something else. Yes, we were doing this. 25 orders multiplied by 666.67. This is 16,667. It is one and the same. Don't see the answer, please. Next. Setup. 40,000. Now this is good. Number of production runs. Setup should be divided in number of production runs, right? All the three products are produced in a production run of 48 units. So I want answer of how many units you are manufacturing in X. Can you tell me in X? 1200, 1440 in Y and 1968 in Z. How many units are manufactured per production run? All the three products are produced in a production run of 48 units. So one production run will be having how many units? 48 units, right? So it will be having 48 units over here also, 48 units per production run, 48 units per production run. Can you find out number of production runs? It is 1200 divided by 48, which is 25. 1440 divided by 48, 30. 1968 divided by 48, 40. 41 number of orders. No, sorry, number of production run. What is this? Number of production run. And this cost should be divided, setup cost should be divided in the ratio of number of production run. They have told us number of production run. I will be finding out cost driver. Setup cost is 40,000. Production runs, total production runs are 25 plus 30 plus 41. 96. Total is 96. It is 416.67. $416.67. I am distributing setup cost of rupees 40,000 to all the three departments based upon number of setups, which are 25, 30 and 41. 25, 30 and 41. And our cost driver is 416.67. 416.67. 416.67. 416.67. So let us distribute the cost. 40,000 into 25 divided by 96. 10,417. 17,083. I have calculated it in different manner. You have calculated 25 into 416.67. I have calculated like this. 40,000 into 25 divided by 96. We both got same answer. What I am doing? I am distributing 40,000 in the ratio of 25 is to 30 is to 41. That is the same thing, right? What we are doing as a cost driver and cost per cost driver, it is the cost is distributed in the ratio of number of production runs. This was a setup cost. Then there is quality control. 28,240. Rupees 28,240. Number of inspections. Now, when the inspections are done for each production run. So, one production run is equal to one inspection. So, number of inspection is equal to number of production runs. So, I can distribute it in the ratio of 25 is to 30 is to 41. I will be finding out cost driver, however, because they normally in ABC, we even require this cost driver unit. And if it is not coming in decimal, I will be using also that cost driver. 28,240. And 294.17 multiplied by 294.1, 25, 30, 41 into 294.17 into 294.17. I will be just distributing it in ratio. 28,240 into 25 divided by 96, which is 7354. (28 to 40) into 30 divided by 96, 8825. (28 to 40) into 41 divided by 96, 12,060 rupees. Quality control cost is distributed in the same ratio as number of production runs. Maintenance 1,28,000 maintenance hours should be distributed in maintenance hours. Total maintenance hours were 6,400 and was allocated in the ratio of 1:1:2. See, if you know ratios and proportion perfectly, you will understand the total number of labor hours, total number of maintenance hours practically is not important. Right? Yes, to find out cost driver, it is important. 6,400 is to 1:1:2. What is the answer? 6,400, 1:1:2. It is 1,600. 1,600 and 3,200. Right? I can find out cost driver, however, 1,28,000 divided by 6,400. 1,28,000, which is my total cost of maintenance, divided by 6,400, which are my total maintenance hours. So my cost driver is 20. Cost driver is 20. The cost is maintenance cost. Maintenance cost and cost driver is 20. How many labor hours are used over here? Sorry, maintenance hours are used over here. 1,600, 1,600, 3,200. 1,600, 1,600, 3,200 for X, Y, Z respectively. Multiplied by 20 is absorption rate. This is 32,000. 32,000. 32,000 and 64,000. What you could have done if you don't want to find out cost driver rate? Can you tell me? This is what I was talking about. You can easily find out. Exactly. 1,28,000 will be divided in the ratio of 1:1:2. Right? It does not make any difference what a multiple is. Right? 1:1:2. You then created into 1,600 into 1,600 into 3,200. And then you distributed in the ratio of 1,600 into 1,600 is to 3,200. It is one and the same. You could have first distributed in the ratio of 1:1:2. I will be getting total cost including prime cost. I should include prime cost in it. 129,600 plus 16,667 plus 10,417 plus 7,354 plus 32,000, which is 196,038. One 149,760 plus 16,667 plus 12,500 plus 8,825 plus 32,000. 2,19,752. Four lakh 5,408 plus 16,667 plus 17,083 plus 12,061 plus 64,000. 5,15,218. I want per unit also. 196,038 divided by 1,200. $163.36. This is per unit. 2,19,752 divided by 1,440. 152.60. 5,15,218 divided by 1968, which is 261.80. Have they told us to comment, calculate the total cost per unit of each product under ABC, calculate total cost under absorption? We have done by both the methods. Yes.
Number of orders આપેલું.
Yes.
એમાં આપણે એમ લખેલું છે કે number of orders was 25 units for each product. એટલે આપણે 25 units નો આપણે order આપ્યો છે.
Yes.
હા તો 1200 divide by 25 નહીં કરવાનું છે. તો આપણને number of orders મળે.
No. For each product, which are the products? X, Y, Z. So for X you are giving 25 orders. For Y you are giving 25 orders and Z you are giving 25 products. Each product means not each unit of one product. There is difference. Each product means X, Y and Z. That is also termed as each product, right? It is not given each unit of one product gives 25 orders. That is not possible. You are saying 1,200 divided by 25. What does this mean?
Giving 25 units in one order.
But what is the cost driver? Is it units in one order or it is number of orders? Number of orders. You need to see cost driver. You need to distribute the ratio in cost driver. And what is a good cost driver to distribute ordering cost is number of orders and not units in number of orders. Right? Ordering cost is dependent upon number of orders and not ordering quantity. Right? It is dependent upon number of orders. Yes. On ordering quantity, number of orders will be dependent. Right? but it is written number of orders were 25 units for each product. Let us now go to answer. In answer, they have distributed ordering cost in some weird ratio. They have found out this segment 9. Answer is same for both of us? No. And there will be difference in only material procurement cost. We have divided it equally. Okay, they have done per unit, so we are not getting an idea. But what is the cost driver total for them? 185 in number of orders. What they have done? 1200 divided by 25, 1440 divided by 25, 1968 divided by 25. And they have found out 48 units are per order and distributed in the ratio of 48. So what they have taken as cost driver? Units per order, which is 48, 58 and 79. And believe me, as per the question drafted, it is not correct. As per answer, it is correct, but as per question drafted, it is not correct. And so they have given last line. If it is directly written number of orders was 25 units for each product, you should be taking number of orders as 25, right? This is C 5.9. Somewhat good question. Otherwise, it was just multiplication again. C 5.10. PQR Limited is engaged in production of 3 products PQR. The company calculates activity cost rates on the basis of cost driver capacity, which is provided as below. Direct labor hours in labor hours, production run in number of production runs, quality inspection in number of inspections. Cost is given, cost driver total is given, cost is given, cost driver total is given. The consumption of the activity during the period is as under. Direct labor hours, production run and quality inspection. Number of quality inspection might be given. You are required to compute the cost allocated to each product from each activity. Calculate the cost of unused capacity of each activity. This is exactly same as question number 1. Why it is appearing in classroom? Because it is a latest question, June 2021. The potential customer has approached the company for supply of, this will be doing last. But let us first compute this. Compute the cost allocated to each product. Let me first find out cost driver rate. 3 lakh divided by 30,000. It is 10. I am not using Excel sheet. I am just finding it out over here. 1,80,000 divided by 600. It is 300. And 2,40,000 divided by 8,000. It is rupees 30 per inspection. I am drawing for PQR as well as total. PQR total. P will be allocated for 10,000 direct labor hours, Q 8,000 and R 6,000. 10,000, 8,000, 6,000. Direct labor related cost 10,000, 8,000, 6,000. Multiplied by 10, multiplied by 10, multiplied by 10. In P, we will be allocating rupees 1 lakh. In Q, we will be allocating 80,000. and in R we will be allocating 6 lakhs. Total will be it is 60,000. Total will be 2,40,000. Let us find out first all three costs. Production runs are 200, 180 and 160. 200, 180 and 160. Production run related cost. What is the cost driver for production run? 300. It will be 60,000. 56, 54. 48,000. Total is 1,60,000. Quality inspection related cost. Number of quality inspections are 3,000, 2,500, 1,500. Absorption cost is 30. This is 90,000, 75,000, 45,000. 2 lakh. What is total for P? 2,50,000. This is 2,09,000. 1,53,000. Total 6 lakh. But please understand, this is for used capacity. So in first question we have done Excel sheet. So in Excel sheet everything was adjusted. Here I'll have to draw a different chart for used capacity. Direct labor related cost. How much is absorbed? How much is absorbed based upon hours? What are total labor hours? 10,000, 8,000, 6,000. 24,000 hours. How much rupees is absorbed as far as labor is concerned? 2,40,000. What was budgeted? Budgeted was different. How much budgeted was in hours as far as labor hours is concerned? 30,000. And what was budgeted cost? 3 lakhs. Under absorption, over absorption? Under absorption because of 6,000 labor hours lost or unused of rupees 60,000. Similarly, you will have to do it for production run related cost and quality inspection cost. Production run related cost and inspection cost. Production run absorbed are 200 plus 180 plus 160. 2, 3, 4, 5, 40. Total are 540 runs. Absorbed total cost is 1,62,000. Budgeted were 600 production runs. So budgeted absorption or total cost was 1,80,000. So there is under absorption of rupees. 162 minus 80 is 18. Because of unutilized capacity. Yes. Tell me. Inspections are total 3,000, 2,000. Total is the 7,000 which are absorbed. 7,000 hours. Total cost absorbed is the 2,10,000. Total cost budgeted was 2,40,000 and total hours budgeted was 8,000 inspections. Sorry, 8,000 inspections. These are inspections, not hours. So there is under absorption of rupees 30,000 because of unutilized facilities. You can see question number 1 and prepare only one chart, right? In this I have prepared 2 charts, but in only one chart also all the informations can be easily accommodated. We are going to question number 3. A potential customer has approached the company for supply of 12,000 units. Of a new product X delivered in the lot of 1,500 units per quarter. This will involve 1,500 units per quarter. And what is the total order? 12,000 units. See, read the question properly. A potential customer has approached a company to supply 12,000 units and 1,500 units per quarter. 1,500 units per quarter. So in one quarter he orders 1,500 units and total he wants 12,000 units. So how many quarters we will be supplying him? 12,000 divided by 1,500. So 8 quarters. This will involve an initial design cost of 30,000 and a per quarter production will involve the following. Let us first find out what they want us to do. Direct material, direct labor, number of production, number of quality inspection. Prepare cost sheet segregating direct and indirect cost and compute the sales value per quarter of product X using ABC system considering a markup of 20% on cost. Sir, should I find out cost per quarter or should I find out total cost and divide it by 8? It is on you, right? You can find out cost per quarter. You can find out total cost of this customer of 12,000 units and you can find out. I am finding out cost per quarter of 1,500 units. Cost per quarter of 1,500. direct material is rupees 18,000 and this cost is per quarter only. So I don't have to convert it, right? Direct material cost is rupees 18,000. This is direct cost. Direct labor hours are 1500 and the absorption rate is rupees 10, right? Direct labor hours are 1500, absorption rate is rupees 10. Number of production runs, also this is per quarter, 15. Production, it is number of production runs is 15. And related cost with cost driver, it is rupees 300 per production run. It is 4,000 production related cost. And number of quality inspections are 250. Quality inspection cost per quarter. Number of quality inspections are 250. And our cost driver is rupees 30. So it will be 7,500. Alright. There is one design cost. New product X to be delivered in the loss of 1500 per quarter. This will involve an initial design cost of 30,000. Should I add it over here? Yes, it should be added, right? It is a direct cost, directly related to this new product X. So it is a direct design cost. Should I write down 30,000 or 30,000 divided by 8? 30,000 divided by 8. 30,000 is for full product and all products will be selling 12,000 units for 8 quarters. So it will be 30,000 divided by 8. What is the answer? 3750. My point is, which are direct cost and which are indirect cost? Direct material and direct are direct cost. What about direct labor cost? It is a direct cost. Even if the method is absorption costing, it is cost per labor hour. Whatever 10 rupees we have found out, it is nothing but average cost per labor hour. So this will be direct cost. This will be indirect cost. This will be indirect cost. They want a total direct cost and total indirect cost and total cost also and even selling price also. 18,000 plus 3750 plus 15,000. 36,750. Indirect cost will be 12,000. So total cost 48,700. How much profit margin they want? Considering a markup of 20% on cost, you will have to find out sales value of this 12,000 units. Plus 20% on cost as markup. Markup is nothing but profit. It is 9750. This is the sales value. What is sales value? 48,750 plus 9750? 58,500. Rupees 58,500 for how many units? 12,000. It is 1,500 units. This will be selling price per which will remain same for all the quarters. 58,500 divided by 15, which is 39 rupees. Two most important point to be understood in overhead. Please try to concentrate. We know traditional system, we know absorption method, they are same, and we know ABC system. What does traditional system do? It totals out the overhead and distributes it in the ratio of a blanket rate. What ABC does is it segregates the overhead in based upon its activity, and for each activity the cost is allocated based upon the cost driver which is based upon that activity. So it is termed as ABC costing. Sir, but how to find out absorption rate? Please try to concentrate in this question where we found out direct labor hours. Over here, it was question number 5.9. Try to understand this 5,400, 7,200, 14,760, that is total 27,360. This is 27,360 rupees 9 per direct labor hour. This are, please concentrate. They are actual labor hours and not budgeted labor hours. They are actual labor hours and not budgeted labor hours. Normally for absorption rate, we get everything budgeted. What are this 30,000? Can you tell me? They are budgeted labor hours, forecasted labor hours, or actual labor hours? Budgeted labor hours. Actual labor hours are something different. It is 24,000. Sir, then company takes absorption rate based upon actual labor hours or actual cost drivers or budgeted cost drivers. Try to understand what would have happened in 5.9 question. The company might have incurred the cost. The company might be having a fixed selling price. Try to understand, potatoes price increased. I went to a Pani Puri shop. They are still selling at rupees 20. Is it possible? Yes. In some of the business, costs are not dependent upon, the selling price is not dependent upon the change in cost. You have learned economics, right? In some of the perfect competitive market, you are price taker and you are not price maker. So you will have to keep that price if you want to sell that product. In that case, sometimes the absorption of overhead is done based upon actual number of hours or actual units rather than budgeted units. And if you do it by actual units, believe me, there will be no under absorption and over absorption, right? Because total actual cost will be divided by total number of actual hours. So there will be no under absorption or over absorption. This happens when you are doing it afterwards, like accountancy. The year is over, your total cost is determined, your total direct labor hours is determined, you are using absorption costing. You decide a blanket rate, distribute the overhead to all the products, you will be getting total cost of production. You are already having sales. Why you are already having sales? Because the year has started or year is over. Year is over. So you absorb the overhead based upon actual things and there is no under absorption, over absorption. So there will be no treatment of under absorption and over absorption. But if cost is to be determined and the selling price is to be determined based upon cost, selling price is to be determined based upon cost. It should be determined at the start of the year or at the end of the year. Start of the year, then you will have to absorb your overhead or you will have to absorb your forecasted overhead based upon forecasted rate and forecasted total. That is budgeted cost and budgeted units, right? Or budgeted hours. And this is a good method of absorption costing. Why? Why we are learning absorption costing? What should be our selling price? That is our target. Why we have learned cost sheet? To find out profit? No. To find out profit, we have learned 11th, 12th standard, first year foundation, accountancy, right? What does accountancy gives you? It gives you profit. But yes, if you want product-wise profit, then cost P&L account will give you product-wise profit. If you see Reliance Industries Limited P&L account, it will not give you product-wise profit. If you want product-wise profit, you will have to prepare a cost sheet. There the absorption will be based upon actuals. Because the year has already passed, you just need to segregate the overhead between different products. If you want to determine the selling price based upon the cost, and if you want to absorb the overhead, it will be based upon budgeted rupees and budgeted hours. Are you getting it? So sometimes actual is used, sometimes budgeted is used. Don't get confused that, sir, why actual is used and why budget. Whenever budgeted is given, we always use budgeted, right? To find out overhead recovery rate, we always find out budgeted. All right. And then based upon that budgeted rate, we divide it based upon number of hours. We divide it either by absorption or by ABC system. Also, believe me, this type of chapters and this type of method of coaching of CA, many of you might have heard that CA value is going down, right? There is some recent amendments in parliament. You are knowing something about it? You are not knowing. You are knowing. What is coming new? IIA. All right. What is IIA? Indian Institute of Accounting, which is not in your amendment bill. Nothing about IIA is said about in your amendment bill. But I personally feel that what parliamentary committee has given the decision to set up an IIA which will compete CA. How it will compete CA? They will be getting powers to audit your financial statement. You have learned in audit that only a chartered accountant is eligible to do audit of financial books of accounts. Now IIA can do audit and chartered accountant can do audit. I don't know why there is a problem. IIA is not a problem to us. If you are a chartered accountant, still you are eligible to do audit. Yes, you are not taken away the powers. Someone else is given the powers. So a graduate from IIA will be eligible to do audit. This will remove monopoly of CA Institute. It should be removed. We have learned in economics, monopoly is always bad. Not for a person who is a chartered accountant, also monopoly is bad. See, we are not learning anything new just because other chartered accountants are not learning something new. If there is a competitive organization which is doing something new, who publishes the accounting standard? Institute of Chartered Accountants of India. What will be research hours of Institute of Chartered Accountants of India? Will be very less. We are not a research institute. Are you getting it? And this can become a research institute. A more sound, say we take American standards, say we take, there is Ind AS, right, concept, which is very close to American standards. Now what happens is, if you find out an institute which works like IIM and where this type of coaching is not done, you are taught everything on MS Excel, you are not having exams and you are having projects. How to get inside it is a difficult exam. Say you are having an examination of accountancy, statistics, economics and OC, which you will have to clear to get into IIA. All right. Then what you have learned in this? Believe me, you have learned calculations. The method you are taught is calculations. What is expected from you in examination is calculation.